Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of us is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Sunday, June 15th, getting ready for the week starting tomorrow, June 16th, Monday. And because, doing an overnight market prep tonight, I'm not going to be doing pre-market prep tomorrow, but I will be doing pre-market prep on Tuesday and Wednesday. But then let's see. Thursday evening, Thursday is Juneteenth, so I believe the market will be closed then, and I will be doing an overnight market prep on Thursday to get us ready for Friday, just because the schedule at work's a little wonky this week due to the holiday. But yeah, I'm just going to be going over, the usual tickers, the volatility SPY, and Bitcoin and Ethereum. Did want to look at GameStop and oil real quick, and then I will be taking requests this evening for ticker request live. And since it is a Sunday night, as is kind of typical, I do have a drink here. If you are tuning in, whether tonight, tomorrow, whenever, make sure you pour yourself a nice drink, whether it's coffee, whether it's apple juice, wink wink, or whatever you want. Just hanging out here going over some charts. But anyways, cheers to you guys. Cheers to, the weekend. Hopefully you had a great one. Hopefully the week's looking good ahead. And cheers to any fathers out there. Happy Father's Day. Hope you're having a great time with friends, family. And thank you for being dads. We all appreciate you. All right, that's a strong apple juice. So I'm just going to be beginning with the UVIX here, which is the 2x long VIX futures ETF. Usually this is what I go over. It was up 16.33% on Friday, but it has pulled back about 5.5%, almost 5.5%, 5.23% in the overnight trading. But actually, I think better than, going over the UVIX perhaps on a daily basis, it might just be good to really just focus on the VIX whenever it's below 17. Maybe that's a good time to add for a hedge. Whenever the VIX is above, maybe not so much, because, the VIX on Friday did hit a high of 30.99, getting very close to 32, which just so happens to be my average. If we look at the 10-minute time frame, we can see, that was the high. I guess it did get pretty close to 32 at 32.55 during the overnight between Thursday and Friday. And so that was, of course, following, the big event. I don't really want to get into too many things or say something that might, flag the stream. But conflict in the Middle East that started Thursday, really, right when the overnight trading began Thursday. And we saw that high of 31.52, kind of cooling off. And this actually makes me think that we're probably going to see new all-time highs in the market, just like so much is priced in. There's nothing, even the major conflict, what seems like a major conflict that we're seeing between Israel and Iran. It seems like, volatility is not going through the roof. So, we're not really fazed by it. So that does make me think that the market is looking really strong. But anyways, that's the UVIX. Flipping over to the VIX, it does look like, here the way that I have been looking at it, market volatility index, this did go up 15.54% on Friday. But closing the week at 2082. But actually, I think, perhaps a better way for me to look at this, just looking at this on the daily, is maybe to be looking at the VIX on, on TradingView, because we just have a little bit more information here. So this red candle, this is the pullback that we're seeing for tomorrow. The futures for the 16th does look like it's currently at 2102, whereas it looks like we closed Friday, just out of curiosity. The closing price here was 2152, and does that match 2082? So 2182. So yeah, I think that this is just going to factor in, I imagine, Greenwich Mean Time, GMT, so factoring that in rather than this being East Coast time, which doesn't include after hours. So yeah, I mean, I guess that includes the futures. I'm not exactly sure. But we can see that it is pulling back pretty notably. And just, out of curiosity, comparing numbers here, Friday the 13th, the high was 23.01. What was it over here? Actually, $22. So, yeah, I guess this is a little bit different way of looking at it. Maybe if I look at it over here, that looks more similar, but there is no futures data with this. So, yeah, a number of ways to look at the volatility. I am apparently looking at this one in Webull. And yeah, we're probably going to be seeing a gap down tomorrow with this, with the markets continuing their upward trend. And so with that being said, let's flip over to the SPY real quick. Did see a gap down on Friday, so we closed up here on Thursday, gap down, didn't go up to fill that gap, and but after closing at 597 exactly, it's up 69 cents. Maybe that's a good luck sign, but yeah, I mean, I think that we could be back above 600 later this week, especially if things don't, if there's no escalation. Hopefully things start to kind of calm down. But yeah, kind of a wild week in the news and all of that, whether domestically or abroad. So yeah, just the fact that in the overnight the SPY is up some, now up, let's see, 597.81. So yeah, this was the after hours on Friday. And yeah, I mean, it's really just not looking too bad. I think that I think the market's pretty resilient. So I would not be surprised if we see the SPY trading back above $600, maybe getting above 605.06, which was last week's high. I don't know about this coming week, maybe the week after, but getting back above 611, the all-time high is 611.39. But then now let's just look over at the SPX. This is the S&P 500 index that the SPY is based on. And, this closed Friday at $5,976.97, down 1.13%, whereas the SPY was down 1.12%. And yeah, basically the exact same thing that I'm saying with the SPY applies to the SPX, although just add a 0 to this one. So I think that this could be getting back above 6,000. The highs of last week was 6,059.40, and the all-time highs for the SPX was $6,147.43. Maybe we get up to like 6,150, and maybe we don't see a big pullback here, because we haven't, I'm surprised, but at the same time, so much can change over the weekend. And I think that we've really seen that with what's been going on in the Middle East, and also with what's been going on domestically. I would think that with all of this news generally just being very bad, that we would see a pretty notable pullback. We're not seeing that. Like I said, I think the market is pretty resilient. And then moving on to the next one, just going to go over Bitcoin real quick. I did cover this pretty extensively yesterday during Crypto Corner Sat Stacker. Bitcoin, looks like maybe it's putting in a bear flag here, currently trading around $106,000. But it did pull down to the low, it looks like, on the 12th of just under 103,000. And if we actually do pull it up over here on TradingView, this is the chart that I do go over in Crypto Corner Sat Stacker, and I'm starting to lean more into TradingView. I just like it a little bit better for charting than Webull. And so yeah, this is that low this was actually the 13th. That was just below 102,000. Just below 103,000. and really, holding this uptrend. So I think that's good. If it does pull back to, sub 100,000, I would be ecstatic to buy the dip. But I don't think it'd go much lower than that. Really, this Fibonacci retracement, which is the 382 that you can see right there, is at just under $98,000. So I feel like that would be like the lowest it would go, but I don't necessarily think orders would get filled at that level. And so for me personally, my dip buy level for this week is $99,000, but that may not get hit. Totally cool with that. And then now just flipping over to Ethereum, this is one that's getting very, very, very close to my dip buy level, which we can see the low. So now this is looking at, Monday the 16th. The low is 25.15, but the low from Sunday, so today the 15th, thinking about it, in the time zone that we're in, this is going to be based on GMT, so it's Greenwich, wherever that is in, I believe, the United Kingdom, but over there. So let's see, Sunday the 15th, the low is $24.92.42, so $2,492.42. My dip buy level, I actually have two of them for Ethereum, and I'm totally cool if they don't get filled. Just, got some cash on the side there for if ETH does dip to 2,450 or 2,350. Got two notable dip buys right around there, and that would, be still respecting this uptrend. So I do think that, I'd be totally fine with it dipping, and I would, I'm expecting this to be hitting, back to 4,000 at least. So there's definitely a lot of upside. Maybe I forgot to mention it, but currently trading just under $2,600 for ETH. But now let's just flip over to GameStop. Very curious about this. What I've seen, I don't know if you guys are GameStop holders, if you're interested in it, whatever. Basically, there were people, a number of people that I respect, and, ultimately they made the right move. But they were talking about, risk up here and or this looking like a bear flag. And, whether they sold up here or sold over here, that was ultimately the right move. But then those people come out and talk about on X, wherever, that they were right because we saw this gap down and, whatever meme stock it is, GameStop definitely has a cult following, although I do feel like it's fundamentally much better than, AMC. But it's like anybody says anything about this being a bear flag, this breaking down, selling, people just go crazy. They really, lose it. And, but the reality is that when people lose it, well, how could you sell all this stuff? You're totally wrong. GameStop's going up. I even have it doodled here that I thought it could be going up, which unfortunately has not ended up being the case. We have pulled back to this level here. This is the 786, 2169, having hit a low on Thursday of 2154. And so that 786 is the retracement from the low of 995 up to the high hit on May 14th of 2024, which was at a price of 64.83. Got the cursor lined up there on May 14th. And so that was the market hours high. That's how I get that Fibonacci level. We've pulled back to it. Also, we do see Roaring Kitty's level marked there, the green dash line. And we do see this purple uptrend, which has more or less acted as support. Actually, not more or less. I mean, we got this little bitty breakdown, but then following that, if buying at that level there, it went up almost 60%. So, we're back at that level, back in the discount zone. And while people are saying, ha ha ha, losers, you should have sold up here, this is actually the time, in my view, to to be stacking more aggressively, to be excited about this dip between 21 and 22, or, above 22 in the overnight. GameStop is up 0.3, or sorry, I should just say 37 cents, 1.6 or so percent, trading around 22.50 after having closed on Friday at 22.14. And another thing that I did want to mention about GameStop, something that I saw on X, and let's just search, GameStop over here. And so they have a new post that they put out here. And let's see, maybe I'll do it with sound and we can listen to it. I'll just kind of try and do that. And so we can just listen to it together. And so the way that I'm going to do that, I'm just going to fumble with this for a second. Okay, so can see the Chrome there, and I will turn on, let's see, Chrome's audio. So when I do turn that on, you should be able to hear it. And let's see the mic audio. I'm going to turn that off, and I will start this, and so we can listen to it together. I'm going to turn the mic audio off because I don't want you guys to hear the sound double. So I'm just going to, let's see, make sure my volume is on. I'm going to turn my mic off and then play this quick GameStop video. So let's see. I could actually just do it like, I'm just going to mute this over here. I'll be back in. All right, so it looks like GameStop had this announcement. It does look like on the license plate here, it says LUV space GME. It says skeet ball, human darts, scream rooms, magnets. Yes, we are open. I'm not sure what it says under there in cursive. This is like a Pac-Man that looks like Buck the Bunny. Got some bunny ears. I don't know. And, push start arcade. This is pretty cool. I don't know what it is. Maybe it's nothing too exciting. I don't know. But GameStop says something new is coming. So, we can, stay tuned for updates over here. And so you can enter your email if you want to stay tuned for updates. I'm not going to. I just get too much spam, and you can check that out. But yeah, that's GameStop.com/preview. And I'm just going to point this out. My response, I'm going to come. Pretty exciting stuff for GameStop. But yeah, just... My thoughts really are, this is the time, this is the technical level where it's, good to be excited about the dip. So if people are being bearish or whatever, just, maybe it takes a couple weeks or maybe a couple months before it starts to rebound. But what happened over here when GameStop dropped, it only spent let's see, after, one second. I'm just going to get this all in the frame here. So it's spent 2 days down here. So, this is big red candle over here down. And then, similar candle to what we saw over here. And so if we just take a measurement from that second day down there, it only took, it only took 5 trading days for it to start to go up, about 7%. And then from there, it went up over 60%. So yeah, I think it's just a good time to chill. I should note though that this time frame, 60 days, 61 days, so about 2 months. So maybe we take a week down here. So good to take advantage of the dip if you want to dip. That's what we got. So, it's like whenever something dips, people get scared or people think, oh, it's going to keep going lower. And, now is a dip opportunity, maybe a week down here and then go back up if it repeats what happened before. So, I feel fine about that. I'm kind of excited about this, although I did add up, to more than 100 shares now, which is probably not a lot to some of you guys. But now I can sell covered calls, which I've been doing. But after basically this week, I'm going to be a little bit more conservative with the strikes. And, while it's down, I'm just going to be trying to add a little bit more, get my average down, and then, I'll trim when it goes up. But I'd like to have 100 shares so I can, rinse and repeat, continue to sell covered calls on a weekly basis to collect that premium. And I believe that would be referred to as wheeling or just, rolling those contracts. And then the other one that I wanted to go over is I'm just going to pull up oil over here. Actually, I'll do it where I have the VIX up here. And so let's just look at oil real quick. So this is one that I did not partake in at all, but now this is actually starting to pull back. So on Friday the 13th, oil went up 6.29%, but actually from the open to the high, let's see, right around there. I wish it didn't have that big box there, but it went up 13% to the high, now pulling back some. So I would not be surprised if it does cool off a little bit because, I think that there's a lot of concern that, the strikes that occurred in Iran, hit some, as far as I understand, oil refineries or oil, something. I'm not an oil expert. And, but it seems to be, it's like really just like restricted to that country and or Israel. And so I think that any spikes in the price of oil, it's not going to be all throughout the Middle East. It's not going to be all throughout the world. It's just going to be, Iran. So maybe we see a pullback with it. I don't really know. I'm not trading it. But maybe also it does go higher, so good to be prepared for that. And yeah, I did have the chat open, but I refrained from getting distracted from it. But Benjamin, I see your comment there. Hey, how's it going? What do I think about Mara? So I will look at Mara in just a second. I'm just going to have another little sip of this. Cheers to you. Hopefully you've had a nice, relaxing weekend, and you're looking forward to, an interesting week ahead, whether it's, because of the news, the global news over the weekend, beginning last week, or because, on, I believe, Thursday, the market will be closed for Juneteenth, but maybe I'm mistaken about that. Maybe it just closes early. I don't know yet. We could actually look that up, and then I will pull up Mara. I'll just look that up first while it's on my mind. I'm just taking a little sip here quick. So let's look up. Let's just ask Grok. Will the stock market be closed for Juneteenth? Yes, the U.S. stock market, including New York Stock Exchange and NASDAQ, will be closed on Thursday, June 19th, in observance of Juneteenth, National Independence Day. So, kind of an odd week with 3 days on, 1 day off, 1 day on. I suspect maybe because of what's happened around the world, the past 5 days, that maybe there's going to be a lot of volume tomorrow, but I think towards, getting into Tuesday, Wednesday, volume might be notably lighter because it's kind of like, if I worked on Wall Street, it's like, okay, well, lots of stuff going on over the weekend, so we've got to start Monday strong. But because the market's closed on Thursday, I'm not going to come back to work for 1 day before the weekend. So I'm just going to take, 4-day weekend. I'm not going to come back to work Friday. Let's have some, closed positions, or just, not open up a lot of positions this week. So it could be a pretty light volume day, or light volume week, although I think it will start kind of heavy. But yeah, I'll just come back over here, and actually I'm going to note this in my little notebook so I know which ones I add, so I can add the tickers to the description and the post on X. But yeah, so this is Sunday, June 15th. Got the usual tickers, and then I did GameStop. Then I did a little bit of oil, but not really. And now I will do Marathon Digital, which I don't think that's their name anymore, but it says it. Actually, Mara Holdings. No, I guess they're not Marathon Digital anymore. That's crazy. They used to be Marathon Digital. Let's see what the profile says. Mara Holdings. Yep. So it's kind of like how Tesla used to be Tesla Motors, and then it just became Tesla. Marathon Digital used to be Marathon Digital, and now it's Mara Holdings. And so this one, I think that it could be seeing something like I've doodled here, so maybe coming down to around 12. So I think it's good to brace for that. But just like, if you want kind of like my general overview of what I think is going on in crypto, I do go over Bitcoin at the beginning of, that's the first one that I go over in Crypto Corner Stacker. So I just kind of give an overview of, where I think that could be going. I guess I also do that every day for pre-market or overnight market prep. But yeah, I think that Mara will follow Bitcoin. And so currently it looks like Bitcoin is potentially forming a bear flag. So I think that could be going lower. And, I have these two alerts here, one at 99,000, one at 98,000. So that's where, basically that's the dip that I would want to buy. Just a little bit more aggressively. I'm not super aggressive with my dip buys on Bitcoin because I kind of view Bitcoin as, a retirement fund rather than, a trade. So I don't want to be too aggressive unless it's really dipping, lower like this. But I don't think that, in all honesty, that will necessarily hit sub 100,000. So, I might not get a dip buy on Bitcoin this week. But at the same time, though, maybe this is a bear flag. Maybe this is just waiting for the market to open for Wall Street to dump their, ETF holdings of Bitcoin. I don't know. But yeah, generally, I think Bitcoin, Ethereum, others will be hitting a higher, whether it's all-time highs or just for Bitcoin, higher all-time highs. But others maybe not. But I think that with that being said, with this being like the 4-year cycle, the fourth year of the 4-year cycle, last time, 4 years ago, Mara was hitting, let's see if we go back in time, above $80 a share. Maybe it gets back up there. Maybe it just gets up to the 30s, like the highs over here. I don't really know. But I think that like by the end of the year, so like my Crypto Corner Stacker thesis is that crypto, whether it's Bitcoin, Ethereum, or others, will be topping between May and December of this year with the 4-year cycle thesis. Just having a lot of conviction in that. But I think it could be prolonged. I think that it could be extended. And so by prolonged, I mean that if maybe we see it, like we could just see it rather than getting a blow off top, we could just get like a gradual increase and a more sustainable rise. And so that might be, not as exciting for something like Mara, but I do think that ultimately this will be going higher. And I do think that it could be hitting, very easily 22 later this year. But yeah, in the short term, I guess what I would be looking for, like I said, I think it could be coming down to 12. So I think it's just good to brace for that possibility. But if just looking at the chart here without any drawings, we have, been putting in, let's see, from this low that was hit on April 4th, we have been, and that was right around, Liberation Day. when the stock market hit a bottom and did a V-shaped recovery, from there, we've been putting in higher lows. And so as long as, like, let's see, what was the low over here? That was 1393. So as long as we don't go like sub 14, I think that Mara is looking good. If we do start to close below 14, then I would look for 1263 over here. That would be the next, low that we want to be maintaining, price above. I guess I can look at the moving averages. Here, maybe there's some insight. It does look like this yellow one. That's the 50-day moving average. We did test that over here on June 2nd. Got a nice little bounce there. Maybe what we're going to see is a pullback to that level again. Maybe actually pierce it, go below it, but ideally close above the 50-day moving average. And so currently that's at 1430. That's going to change every single day. So that's a level that I would keep an eye on because I do think that there could be some more downside and even, getting a wick below, but close above, I think that would be looking fine. But then getting closes below the low here from June 2nd, that low was 1393. If we start to close below that, 1263 over here. But yeah, we did bump into the blue line here, which is the 200-day moving average. That seemed like some notable resistance. Now pulling back to that trusted, tried and true, 50-day moving average that we were below it over here. Then we broke above, retested, moved higher, barely retested, didn't even get to it, and now we are above it. And so Mara did close on Friday at 1504, being down nearly 5% on the day, but in the after hours it bounced a little bit, 5 cents. And in the overnight currently still up 5 cents, so currently at 1509. So yeah, I don't think that we're going to be seeing a really massive drop off. But if we do, this Fibonacci retracement here, and actually, what's this? What's that one? Okay, so that's a more notable. What's this? That was, I think, something I can delete maybe. Yeah, I'm just going to delete that one. That's just the trend line that we were hitting, a higher low. I'm going to remove the moving averages so it's not too cluttered. But yeah, we did hit a higher low here, and then we broke below that trend line, but we still put in a higher low. So that trend line, it's not significant. So I'm just going to delete that. But from this retracement, we have these other levels. We also have this shorter retracement here. Maybe there's some confluence if I add the 50% level on this fib retracement, which maybe we've already tested, so maybe it's not as significant. That actually corresponds pretty nicely. 1352 with that 50% retracement corresponds very nicely with the 786, the light blue retracement, which I think just goes from the low here up to the high here. And so, yeah, just to keep the clutter off, I'm going to remove that 50% retracement because it does correspond with this 786 very nicely, which is at 1362. But yeah, ideally we don't see any closes below 14. But yeah, we'll just have to see how it evolves. And for me, I have been, adding to my calls that expire. What's one contract? I can pull it up real quick. The contract that I'm holding is the $50 strike call that expires in January. I could have trimmed here at break even, but I didn't. And now my average is, I think, right around 90, maybe a little bit lower. And so here it does look like, I don't know if this is useful for contracts, but Fibonacci retracement, we are right around that 786, which is at 46 cents. But this closed, it looks like at 44 cents. But yeah, I've got, 6 months, more than 6 months between now and expiration. So wait, actually think about that. July, August, September, October, November, December, 7 months between now and expiration. And yeah, but if it does go a lot lower, I'm actually going to chill on my buying for the time being. If it does go a lot lower, then I might want to be more aggressive to really get the average down and then trim and or exit, exit the majority of my position at, wherever break even is. But yeah, let's just pull back the regular chart here. And then I did see another comment, a couple more comments. So Benjamin just has a follow-up. Is there a correlation between oil and Bitcoin? I'm not sure. I can look that up, but also I just want to address John. He has in the comments or in the chat, how's it going? It's going pretty good. I was hoping that the VIX would be spiking up, that would be gapping up. So I'm a little disappointed in that, but yeah, I mean, I just think that we're really in like a resilient market. And, and I don't think that has to do with Trump necessarily. I don't think that has to do with too much. I just feel like we have a market that, is kind of engineered to not go down. So I think that's great in some ways, but I was kind of hoping to take some profits on the UVIX, but it is what it is. But yeah, it's been a nice weekend. Did a little bit of work outside at home. Was weeding the garden a little bit, and I kind of let it get overgrown because I'm lazy. But I was pulling some weeds, and a garter snake came out and went to another patch of weeds. So that was kind of a surprise. Do I like snakes? Not necessarily. But I think it's a nice ecosystem that's there. So I'm happy about that. I'm growing a little red oak from a sapling. I'm excited about that. And yeah, I don't know. This weekend, yeah, I'm feeling pretty good. So cheers to that. And loving SPXU if we open up green tomorrow is what John's saying. So I will pull up SPXU so we can take a look at that in a second. But I'm just going to ask Grok about correlation between oil and Bitcoin price. That might be an interesting one to look at. And I don't know about you guys, if you guys have been doing any voice stuff with AI, but I've been experimenting with it a little bit. And so let's see. I don't know if I can do voice here, but probably don't want to do that anyways. So let's see. Is there a correlation between oil, I'll say crude oil, and I'll say between the price of crude oil and Bitcoin? And then I'll have a follow-up question, but let's just see what Grok has to say. The correlation between crude oil prices and Bitcoin prices is not straightforward and varies over time, market conditions, and specific contexts. Here's a concise overview based on available research. And so one thing that I'd have to say about this is something that Scott Melker, the wolf of all streets, says frequently is Bitcoin's an uncorrelated asset. So that's going to mean it's not necessarily correlated with gold. It's not or I shouldn't say necessarily. It's not correlated with gold. It's not correlated with the stock market. It's not correlated with tech stocks, and it's not correlated with oil commodities. It is, something completely different. And so that is why, it is a nice asset to hold because it's uncorrelated. And so let's see here. The first point, mixed evidence on correlation. Studies show conflicting results. Some research, like a 2019 study by Al-Yahi et al., found a negative and time-varying condition correlation between Bitcoin and crude oil markets, suggesting Bitcoin might act as a hedge against oil price volatility in certain conditions. I'm not going to continue with that. That is, well, I guess maybe I should continue what Grok has to say here. But generally, my thoughts are that this is a study from 2019. I think that things have really changed a lot since then with the ETFs, with Wall Street, BlackRock embracing Bitcoin. So I would take that research with a grain of salt. Also, it's published in this is from Elsevier. And so that is going to be very, academic. And I don't know that there's necessarily, maybe it's an economic journal that Elsevier is publishing there, Science Direct. But yeah, I take it with a grain of salt, really largely because it's outdated. Other analyses, such as a 2022 study, I would say more relevant, indicates a positive correlation, particularly during specific periods like November to March of 2020, of those years, where Bitcoin and crude oil prices showed similar bullish trends. And so I would say that if there is a correlation, and this is something I was talking about earlier today, actually with my dad, hanging out with my dad on Father's Day, the difference between, correlation and causation. And so just because there was a time period, so November 2020 to March 2021, where Bitcoin was correlated with oil prices, I would say that because that only lasted for that period of time, that there was only a correlation, there wasn't a causation, there wasn't anything concrete that was, suggesting that, a change in oil results in a change in Bitcoin in the same direction. That's just like saying that, whatever the market conditions were, if oil was going up, Bitcoin was going up, basically because of, if people are panicking, they're selling everything type of thing. And so I think that's an example of correlation, not causation, and the fact that it was for a short period of time negates the fact or the idea that there is a that there is, a relationship there. There's no relationship. It's only coincidence. It's correlation, not causation. So I would say this makes me think, no, there's no correlation there from what's up here. But then what we can also consider here is the energy consumption link. I think that this is an interesting aspect because it gets into Bitcoin mining, also related to Mara. And so Bitcoin mining is energy intensive, as I'm sure we're all aware, often relying on electricity derived from fossil fuels like oil. And so this creates a potential indirect link where rising oil prices could increase mining costs, potentially impacting Bitcoin prices positively. Higher costs could signal higher value or negatively reduced mining profitability. And so, for instance, a 2021 study noted that Bitcoin's energy consumption ties it to energy markets, suggesting a positive association with oil prices in some scenarios. And so my view, again, is if the rationale includes a word like some, there's no correlation. A correlation would mean that these things are moving together, that one drives the other. There might be some like coincident times when they are responding in similar ways. But really, I would say that there's no correlation. And if there was to be a correlation that was of some significance, I would think that would be a driver or a motivator for miners to diversify their, energy portfolio for their resource portfolio for mining Bitcoin. Because, if I'm a Bitcoin mining company like Mara and all of my mining capabilities are tied to the price of oil, if there is an event that happens in the world that causes oil prices to spike, that's going to be a problem for myself, my shareholders, and the amount of Bitcoin that we're able to mine. So I would want to diversify the energy portfolio that a company like Mara has. And Fred Thiel is, I think, just a very great speaker, a really smart guy. They've done things like flaring of methane, which I think methane is also, maybe, a little bit of a concerning thing regarding climate change because methane is a more potent greenhouse gas than CO2. So, but it has a shorter lifespan. So if you release methane into the atmosphere, it's going to have a much more potent warming effect on the earth than something like CO2, but methane won't last as long in the atmosphere. And so, there are pros and cons to either of those, but ultimately I'd say that releasing methane into the atmosphere is going to be immediately, a bad thing, whereas releasing CO2 into the atmosphere is going to be more manageable. It increases over time, but with that time, there, I suspect, will be some innovations in managing the greenhouse effect there, managing that with CO2 harder with methane. And so if there's methane gas that's being released from oil wells, whatever, one of the things that Bitcoin miners have been able to do is to flare that methane. So they're burning it, they're combusting it, converting that into energy that they can use for mining. And then that methane, through that combustion, is converted into CO2, which, while it's still a greenhouse gas being emitted, it's one that is less potent and more manageable. Also, Fred Thiel has talked about, I believe, older wind turbines that are just not as efficient. Bitcoin miners are able to utilize those to mine Bitcoin because for mining Bitcoin, it is worth it for using such a not as efficient form of renewable energy. Like it wouldn't necessarily be worth it for powering a city or contributing to the energy portfolio of a city. But for a Bitcoin miner, they would be able to take advantage of that. I think that this is really just an argument for if there is a correlation, that there should be there should be more diversification in Bitcoin mining efforts. But anyways, I'm rambling a bunch. I don't know if my thoughts are useful or helpful, just trying to put some perspective on it. But here, the next point, market dynamics and hedging. And again, all of this is like research. I am glad that, Grok has done all of this research for me. And this here is a publication. This is Springer. So these are all academic publishing journals. These are ones that when I used to be at universities, I was very familiar with them, either submitting to these public, not necessarily this publisher, but different publications, depending on the field. And so, anyways, market dynamics and hedging research indicates that Bitcoin's hedging potential against crude oil price movements is commodity specific and market condition dependent. For example, Bitcoin may serve as a weak hedge or safe haven asset during turbulent oil market periods, but it's not consistently superior to assets like gold. We may be seeing a change in that, though, because I feel like around Liberation Day, Bitcoin actually responded in a much stronger way than I think people were expecting based on, this prior evidence, this prior research. And then continuing on, a 2020 study found bidirectional volatility spillover between crude oil and certain cryptocurrencies, but not always Bitcoin specific. So, not always. There's no correlation there if they're saying things like not always. And that's just my perspective on, correlation versus causation. Or maybe there's a correlation during certain times, but they're not directly related, which would be like causation. Other aspects, geopolitical and economic events. So this might be very relevant for right now. So recent posts on X highlight instances where geopolitical tensions, for example, the Israel-Iran conflict currently going on, led to oil price surges and Bitcoin price drops, suggesting a short-term negative correlation during such events. However, these are event-specific and not indicative of a long-term trend. So yeah, if there's volatility in the markets, things are just kind of unpredictable. And then so here with this final point, no consistent long-term correlation. So yeah, they're really not correlated. Some sources argue that there's no significant direct correlation as Bitcoin is influenced by unique factors, for example, regulatory news, market sentiment, that differ from oil supply and demand dynamics. And a 2022 analysis noted that while oil and Bitcoin may move together during certain market phases, macroeconomic factors like inflation or global recessions can obscure direct relationships. And so, yeah, I feel like it's only coincidence is what I would take from this. But let's get Grok's conclusion here. So in conclusion, the correlation between crude oil and Bitcoin prices is complex, often weak, seems very evident based on these points, and highly context dependent. It can be positive in some periods, for example, due to energy cost impacts or market bullishness, risk off. and negative in others. For example, during geopolitical crises or as a hedge. So that would be risk. Wait, so this would be, risk on. And during this example would be risk off. Investors should consider broader market conditions and Bitcoin's unique drivers rather than assuming a stable correlation. For deeper insights, specific timeframes or events would need closer analysis. So that's something for further exploration with Grok. If there is interest in that, I'm just going to give Grok a thumbs up to that response because, it's just, I think, Scott Milker's right. It is an uncorrelated asset. So I think it's good to kind of view it like that. And so John is also following up with a comment. I view Bitcoin as a good risk on off indicator. And personally, not a believer in crypto. So don't watch my Saturday Crypto Corner set stackers. Probably really boring for you. I really just do those for myself to keep track of basically my thesis. What I have realized, and this kind of hit me last year, maybe in September, October, I'm not sure exactly when it hit me, but I felt like there was a big lull in Bitcoin and crypto in general. It wasn't really performing that well. And I was just like, well, I thought that, with like the 4-year cycle, this being the third year, we should be seeing, more volatility to the upside. But then with Trump's inauguration, it really started to take off. And then I just realized like, that's all part of it. Losing that conviction is part of it. And I just then recognized like, well, I believe in the 4-year cycle. I've experienced it before, but didn't necessarily act on it or put my money on it at the right time. Right now, I feel like is the time to be doing that. But crypto is not for everybody. But I feel like for me, it's like, crypto, yes, you might be dealing with like CEOs or like, them as businesses. Like XRP, I think is a nice example of that. But like with Bitcoin, you're not really dealing with that. Because it's just Bitcoin, the immaculate conception. It's a commodity. Whereas, something like Ethereum, XRP, you're dealing with the dynamics of the founders. I believe, I'm not sure if they're CEOs, how that works with the cryptos. But, it's like their businesses. And so there is a little bit of, like some BS that you experience with markets and stuff, but the markets never close with crypto. And I feel like there's a lot of fundamental value there. And for me personally, with my job, I'm sure a lot of people do get paid on Fridays. I get paid every other Friday, and immediately I get paid into one bank account, but then I like to transfer it, which is basically my bill paying bank account, but my spending bank account is a different one. So I immediately like to transfer money from the one account that I get direct deposit from to my other bank account. But that doesn't clear until like Monday or Tuesday. And so I really don't like that. And this is not an exciting aspect of crypto as far as investment goes, but stable coins could really speed up that process. And so that's something that would affect my life and, on a bi-weekly basis. Or really, more than that, because, if I'm going on a little shopping spree or something on a Friday, all of that's not going to clear in my account until Monday. But if the bank account or the bank is using stable coins or, like crypto rails that would then be settled more or less instantaneously, I just think that there's a lot of utility there. And so, just crypto in general, I'm excited about. And John did have the request for, let's see, SPXU, so I'll pull that up. That is the ProShares Short SPY, SPXU. So it's short, the SPX. And this is ProShares UltraPro, so I imagine it's 3x leverage short. Yep, 3x inverse, you can see right there. And so, for me at this point, I think that I don't necessarily think that the SPY is going to be pulling back. I don't necessarily think that the SPX, the S&P 500 is going to be pulling back, because what we see, in the overnight for this is, I'll just pull up a 10-minute time frame for the SPX. This is 3x leverage short. is on the 10-minute time frame. Excuse me. On Friday, we have this kind of like, V shape here, and then the SPXU. So this would have been a spike in the SPY. So I can just, flip that over here. So it's just kind of the opposite. This is the SPY because it has the after hours and overnight trading, whereas the SPX does not. And then so with the SPXU, we see kind of the opposite dip here, and then just kind of a consolidation with a little bit of a fade. Maybe this is a bull flag and it's going to go higher, but just the fact that this is down a little bit in the overnight trading, like it's not gapping up, like I would expect the SPY to be gapping down. We're not really seeing that. So I feel like, and also like the volatility, we're not seeing that spike up. So I feel like the downside move might already be in, but maybe it's just, like the SPXU. So if you're going short the SPY, this move right here was, the move, which is about almost 3%. But I think that really began over here, right at that getting into, the after or the overnight trading on Thursday. I find it so insane. Let's actually look at this on the minute time frame. When did that start to spike? That's insane. On the minute, it started to go up. Insane. Like the matrix is real, Yeah, so this would have been the time to like really go short right when that was spiking up. But then we did get, basically a retest of that level here. But from the, move up to there, that's about a 5% move to the upside. And then from over here, it's going to be again around like right around 3%. So yeah, I mean, it could be, spiking up more. Who knows? The market's so volatile. It's really tough to keep track of it all. But I think that, it's a fast moving market. And so, when going short, something like if you were going long oil, that looks like if we do pull up the chart over here, it's starting to pull back some. Maybe it's consolidating before another leg higher, which I think very well could be the case. But it's like just because something went up doesn't mean it's just going to continue going up. It's going to be an up and down, shaking out people faking people out, all that stuff. So I think that this might cool off a little bit. So maybe, I don't know, maybe coming back to like the close over here. So on the 11th, closed at 1867. So like I have the cursor right around, so the close, I was looking at the high. The close was 1848. So right around like 1850, that was also, it looks like the low for the SPXU on the 13th hit a low of 1847. So I think that level could be a notable one. Let's actually look. Maybe that corresponds with a Fibonacci retracement. And so, yeah, it looks like right around there is the 618 at 1849, 1850. So, what I could see happening with this, if it is to continue higher, I don't know that it will, but there could be a pullback to 1849, 1850, not going to the penny. And then, maybe from there, it goes higher. So that's something that I could see with this, but I could also see, this start to pull back and the stock market hit new all-time highs. Maybe not this week, though, because it's a 4-day trading week. And I imagine, especially on Wednesday, it will be very light volume. Friday, light volume as well. So maybe we don't get a lot of big moves either direction. And with that, something that's leveraged and an ETF that tracks an index, that maybe it could be not as, the lag in what we see this week may not be most things might not be great performers this week, especially if something, wanting to be in and out. So I'd keep an eye on like 1850 or so. And so I just got another follow-up from John, and then I do see a comment from Loud Work, I should say in the chat. And so John's saying, my conviction is bearish reversal candles on Wednesday on the SPY. So let's look at that. Bearish reversal candle. So that would be this one. Yep. So, I mean, we did put in, not an all-time high, but we did put in a higher high. And then, opening at a higher high as far as this goes, but then closing lower, bearish reversal. And if the SPY closes higher than 602.85, right around there, John would reconsider his thesis. And so 602.35, let's see, was that the open here? That was 60. Okay, so let's see. The close here was 60. I'm wondering, where is 602.85 coming from? So let's see, what was the let's see, the open here, 604, that was up here. The close, 601. I always read red candles incorrectly for whatever reason. I'm always just used to green, bottom, top, open, close. This is open, close. And so what was the close over here? 603.08. So that's kind of similar to your level. The high over here was 601.25. But yeah, I mean, like getting back up to, the 600s and really getting into that, not just 650 or, getting to like, dollars into the 600 range. Yeah, I think that would be a valid time to switch the thesis. So yeah, I mean, I guess for me, maybe I'm preemptively, expecting really like over the course of the next couple weeks, I would not be surprised if the SPY reclaims 600, the SPX reclaims 6,000. But this week, because overnight trading, I mean, I'm just surprised that it's not, whether it's a gap up or gap down. The fact that it's plus 0.19%, it's like, really? I would have expected a more volatile move to the downside, but maybe it's just waiting for those who do not have after hours or overnight trading or pre-market trading access, and they have limit sell orders, and maybe they get swept out. So maybe there is some more downside. And I've talked about 589 or 590 potentially being the level down there for the SPY, which would correspond, considering the SPX. I'm not exactly sure what that would correspond with. I don't have that level drawn up. But yeah, for the SPY around 589, 590, somewhere around there. So I think we could be seeing a pullback. But yeah, I'm going to check out Loudworks chat there. It's not about crypto. It's about blockchain technology. 100% agree. They're going to tokenize stocks eventually. Yeah, and some of the cryptos that, I feel like I have a very limited understanding of it, but the cryptos that could be used for tokenizing stocks, one would be Chainlink, another one would be Ondo, and another one I believe would be Aave, but maybe I'm mistaken about that. And yeah, so it's, like the exciting thing that crypto brings, the exciting technology that crypto brings is not cryptocurrency, meme coins. Bitcoin, I feel like, is, something of itself, the Immaculate Conception. But as far as crypto goes, what it brings is the blockchain. And I feel like that's really great examples of that, I think, are with stable coins and just the basically immediate settlement, and also that they are let's see, what was I going to say? The immediate settlement, and that they're basically stable coins are backed by U.S. Treasuries. So that's a good thing for the U.S. and maintaining the U.S. dollar as the reserve currency of the world. So I think that there's a great interest, not only for people like me who want to have transactions settled, on Fridays, not on Tuesday after Friday. So I'm losing my train of thought for whatever reason. But but also for, securing, the U.S.'s dominance, with the U.S. dollar as the reserve currency. So I just think that there's so much there, which doesn't even really get into the trading aspect of crypto and effectively betting on blockchain companies. And so Loudwork is also noting Aave as well as Cardano or ADA. Maybe Solana. I feel like Solana is a really interesting one because, it's like kind of like the spicy and exciting version of Ethereum, but that ends up being associated with, whether you like it or not, some of the meme coins, and some of those, like when I say whether you like it or not, official Trump coin, because, I personally hold that just because why not? I think that it's interesting, but it is something that I don't think was necessarily in the interest of, cryptocurrency moving forward because it made it more speculative, meme coin from a president-elect about to be sworn in releasing or being associated with Trump coin. I think that like stuff like that is on Solana, but like I said, hold Trump coin. I'm intrigued by it because there's such a fan base, and it's a U.S. president releasing a cryptocurrency. I feel like that's a very interesting thing. And then also, other things that are concerning with Solana, and not necessarily for me concerning, but I feel like big money, Wall Street, and maybe I'll just this is my crypto list here. These are not going to be the best charts, but just thinking about Solana, I'm actually just going to clear the drawings here because I don't look at crypto in Webull, but just seeing this, Solana is associated with what's her name? Haley Welsh is Hawktua girl, and her disastrous launch of her meme coin, and then also Fart Coin, which to be honest, I kind of want to get Fart Coin. That is a Solana token, and so I feel like Solana is more like the kids table of like versus Ethereum, which is more like the adults table. And so if like companies are going to be built on a blockchain like Ethereum or like Solana, I think that like Wall Street has more conviction in something like Ethereum because it's been around for so long. And, maybe it's not as exciting as Solana, but it's tried and true. Like I feel like every 6 months I hear about like an outage with Solana or something like that. And so that's somewhat problematic. Whereas Ethereum, I just hear people, bashing it being down a lot, which just gets me excited, like it's a dip buying opportunity. And I think that, I feel like I've discussed this before, but, like with Bitcoin having an ETF, having ETFs, maybe I'll just remove my drawings, there's a lot of big money in Bitcoin now via those ETFs that was not able to previously get exposure to it. And, let's say Bitcoin rallies up to, let's say, I'm not saying I expect this to happen this year, but let's say the Bitcoin price goes up to 200,000. So it doubles from where it's at now. And let's say, oh, well, I just made a lot of money on Bitcoin. I just doubled my money on Bitcoin. It seems like it's a little overheated. It might need to cool off. So maybe I'll take a little bit of that off the table. But then I look over at Ethereum. Ethereum's such a lame performer. Everybody trashes it. Nobody likes it. But I can take money out of that Bitcoin ETF after taking a lot of profit. Maybe I put a little bit of that into Ethereum ETF. And then that creates like a different version of an alt season based on ETFs. Like there could be an ETF alt season And then there could be an alt season. So it's like, those who only have exposure to crypto via ETFs could play Bitcoin to Ethereum, and or maybe there'd be a Solana or Dogecoin even, believe it or not. I hear there could be an ETF on that, maybe Cardano, XRP. And so those could be played from going from Bitcoin into alts, ETFs, alt ETFs. But then those, true degens that, actually trade cryptos on exchanges could then, like there would be the second wave, which would be alt ETFs. And then the third wave would be like the more speculative traditional alt season. So I feel like we could see like a 3-wave cycle in that sense. But yeah, I don't know. So many people just trashing Ethereum. I think that there's so much potential with it. And let's see. And then, because you did mention Cardano, this one, to be honest, I have a very small position in Cardano. It's one that I believe I go over it every week for Crypto Corner Stacker, but I believe this week I'm doing $1 DCA every day. So very boring. But just accumulating it. But I had started getting it when it was up at like, let's see, $1, because it's like, well, I think, looking historically, it's been up to like, I think $3 was the all-time high. Let's see if I just look at the weekly, we can see, yeah, up to $3. It's like, if this is at $1, it has potential to 3x, I'm cool to start building a small position. I built a small position over time. Now my average is below $1. I forget exactly what my average is. But with Cardano trading at like 64 cents, there's a lot of upside with it. And also I think that Cardano, Charles Hoskinson, the founder, one of the founders, or I'm not sure if it's CEO, I forget how, cryptos work. But I think that he's been really good about integrating Cardano with Bitcoin, or Cardano being able to effectively have support for Bitcoin applications. So I feel like, yeah, Cardano is an interesting one for sure. It's one that I hold. Basically, all of the ones on the list here, I have small positions in, or in some cases, large positions. And so Loudwork, you mentioned Good Point. I don't know what Good Point you're referring to. That's 5 minutes ago. So maybe that was about the ETF, the alt ETFs. But yeah, I am, to be honest, I feel like I should have just not done anything with stocks. I should have just gone all into crypto, because I feel like it's something that like there's less noise with it in some sense, as long as you don't get distracted by crypto bros and stuff like that. But yeah, I do see the comment from Chess Rock. Hi, what do you think of Tesla? So I will pull up Tesla in just a second. I'm just going to have another little sip here. I got the orange peel in my mouth there. And I am also going to note on my little notepad that I went over crypto. And then I will go over Tesla. And yeah, I mean, I think Tesla generally, I like, in all honesty, I mean, I don't even think I need to say all honesty, but my thought process, perhaps that's a better way to think about Tesla and Elon and his recent involvement with the government. I feel like what happened, his little tiff, or really kind of like massive beef, with Trump, given some of his posts, the feud, I think that his departure from the government will be a good thing for, humanity. Because I think that, Elon was driven away from the Democratic Party. He was driven away from California, and recognized, the death spiral effectively that the U.S. is in, and wanted to participate in the government via Doge, and by identifying government waste, fraud, and abuse, and reducing that so that we get back on track as far as, you know, tending to our debt. And so he worked his ass off for Doge for 2 to 3 months. I forget exactly how much time he was doing that, but it was just spreading him so thin because his stance with Doge really I mean, he's already a very, you know, a person who, for whatever reason, creates division. I think that he's just, you know, a brilliant guy, just very often misunderstood. And, you know, I think people don't appreciate that, you know, the things that he's been able to accomplish come from his, you know, immense focus, which I think comes from Asperger's, and that people just don't really recognize that. They just see him as a billionaire. They don't see him as somebody who has this, you know, like social disorder where he is able to focus on these things and then just, you know, like in most people's views with, you know, overcommit. He spends way too much time sleeping in the factory, all of that stuff. But that's the kind of person he is, that he just, when he sees something that needs to be done, he's just going to go all in on it. And he attempted to do that with the government, got all of this backlash, Tesla's being firebombed, dealerships, all of that. Half of the country hates him because of that, calling him, you know, I guess the other N word. And like, yeah, I just think that he was not expecting that, because he saw what he was doing as, we have a financial problem, a debt problem, and this needs to be addressed. I'm going to do this with the best intentions. And I think that they are good intentions. And I think that the goals of Doge are good and would be great if implemented. But then when the big, beautiful bill, which maybe you could call the big bloated bill, when Elon saw that, he got very upset because of all of his work that he was doing with Doge. It's not really going to be implemented. Those cuts will not be made. And so he's just kind of gone into, like, I guess, like founder mode, where it's like, well, you know, we have this big problem in the US. There are two ways to address the problem. One is to address the debt, pay off the debt, and we're good. The other way is to increase, I think it's some sort of like normalized GDP. I forget what it is exactly. I'm not an economist. But basically to increase GDP to the point where it cancels out any debt, or it balances whatever debt, because we're so productive that it's okay. And so his vision is that because he was not able to address the problem with Doge, he will be able to address the problem with autonomy, with humanoid robots. Personally, I work in a factory. I see a lot of utility in the Optimus robots. I'm not in love with my job. I don't plan on being there forever. So if my job's taken or replaced by a robot, I think that would be great. But yeah, and also just the way that he's changed manufacturing in the country with, is it the mega factories? I forget what the mega, what is it called? Sorry, I'm just going on too many tangents, but what is Tesla's large factory called? And so this should be a quick one, Grok. Come on, man. Gigafactories, not mega, giga. And so the gigafactories, I mean, and if Trump, through tariffs, is trying to reindustrialize the U.S. to bring manufacturing back to the U.S., I would think that, is it Chris Farley? Wait a second. Who's the CEO of Ford? I think it's something Farley. Jim Farley. I think that Ford has kind of leaned into the EVs, I would say. And I think that what has been a misstep in the U.S. government, under Biden, was not inviting Tesla to the EV summit. I think perhaps under Trump, Elon could play a more involved role. Tesla could play a more involved role in whether it's automation, whether it's robo-taxis, the robots, EVs. I think that Elon could play a very important role as, effectively an advisor for, hey, how does Ford, increase the percentage of the parts that are manufactured in the U.S. So more like their company is more American made than previously. So we're not outsourcing any of the parts. How to better streamline the manufacturing aspect of, and I'm talking about Ford, how to better ramp up their EV production to be more competitive with Tesla. I feel like there could be some partnerships established with, let's say, hey, full self-driving gets implemented with the robo-taxis in Austin this month. It ends up being mind-blowing, and it starts being implemented in other cities across the country. And, full self-driving, it's not just something that is, only Teslas can house that. That is something that other companies like Ford could incorporate into their vehicles. The full self-driving camera system effectively, which could then be plugged into Tesla's, data infrastructure, their neural network. And so I think that Tesla could be in a position where not only are owners of Teslas able to make money on their Teslas by, robo-taxiing them out, Tesla will also be able to release robo-taxis into the wild, whether they are, whatever model they want to do that with, or, once they start the, scaled production or whatever of cyber cabs, they would then have, a business like Uber where they not only they manufacture the vehicles and then they just are able to then make money for Tesla. And then also with, Optimus, if let's say, I work at a I almost said the name of it. I work at in a manufacturing plant. And if they were to start buying Optimus robots to then aid in workloads, do more dangerous tasks, or, whatever. I wonder if there'd be a subscription service fee, a subscription service for Optimus. And that is something that Tesla would be able to make money on, servicing all of this stuff. So I feel like Tesla's just in this really interesting position where, it's like, Microsoft did the software, and Apple did all, and Dell and, whatever other IBMs, they did the hardware with using the Microsoft software, or Apple did, all of it in their neat little packages. One thing Apple didn't do that well is, I think, pivot to electric vehicles. Like our president said, everything's computer. Why didn't Apple step into that? And so anyways, this whole random tangent thing that I'm going on is basically just to say that I think Tesla is in a position of being, not the next Microsoft, not the next IBM, not the next Apple, but being all of them combined. And I'm sure other companies, the next Uber. So yeah, I just think that, and Loud Work, thanks for the gigafactories. I'm an idiot. I should have known that. Mega, what's bigger than that? Giga. So I'm just going on such a tangent. Chess Rock, hopefully you're still here with me. But Tesla, again, I think that, with this pullback, a lot of people were saying, being, I feel like kind of bearish on Tesla here. I have to say I'm very proud of myself. I'm going to pull it up on my phone just so I can share the exact buy level. I don't have a huge Tesla position, so I don't have a lot to brag about with them. I did just recently sell. I had a very small TSLA position, but I sold that just getting a little nervous and stuff. But yeah, I'm just going to look at my history. So the last time I added to my Tesla position was on June 5th, where the cursor is, and I bought at $275.37. The low for that day was $273.21. So I'm really proud about that. But after a couple days over here, I got a little bit concerned. I don't want to be going too aggressive and not have enough cash on the side. Currently, I don't have that much cash on the side. So I'm, seeing this bounce, holding above this orange uptrend, which I think is a notable one, going back to the lows from April 22nd, and then also the lows from August 5th, 2 very important days there, pivot lows. We did test that over here before bouncing higher. We did break below it over here, which may have just been excellent dip buying opportunity, not filling the gap down here at 213.65 as the low was 214.25. And so we did pull back, lots of panic here, bouncing. In the overnight, it is up 1.77%, $5.75, trading around 331. And so the high on Friday was 332.99. So we're about $2 lower than the high, but we're higher than the close there. This looks like it could be a bull flag, and that Tesla's going higher. So yeah, I mean, for me, Tesla is one where it's like, I kind of view it as like a retirement position, but at the same time, it would have been nice to take profits up here and then buy back down here, but you never know. And I think that Tesla's going to be getting into the $500 range this year. So yeah, I mean, I just think that Tesla, especially with the robotaxi stuff, with Optimus, Cybercab, I'm so excited about Tesla, the company. I feel like it's like, if you want to be optimistic about the world, just think about Tesla. That's, I'm like the inverse of Tim Walls. I just look at Tesla stock, or Tesla in general, and I just get so inspired. And I think that the new products that they're going to be putting out, whether it's Cybercab, Robotaxi, which I feel like you could argue is like a product or a service, and then Optimus, I think that those are all things that will not just result in one-time purchases, but they'll be like subscription services. And I feel like the world doesn't even realize how much AI and autonomy is changing it. Like, it's changing things pretty fast, but I think that Tesla is, such amazing innovation there. So I'm really excited about that. But yeah, it looks like I've caught up with all of the comments, all of the chat. I've been streaming for about an hour and a half, so I might wind this down unless there are some, last minute requests. But I might just sip on this. And let's see, yeah. The UVIX down over 5% in the overnight. Let's see. Let's look at Bitcoin over here. Ethereum. People aren't as excited about Ethereum. I don't blame them. I just think there's way more upside potential for Ethereum than Bitcoin. But yeah, if I pull this up, I mean, we're still holding these higher lows, that trend line. And yeah, I mean, this low that we hit on Friday the 13th, which was 102.746 and 1 penny, that might be, the low. But what could also happen is, I guess there's maybe a lot of clutter on the chart, but just looking at this trend line here, this white trend line, people draw that up on the chart and they say every time we've wicked below it, we've closed above it, we respected that trend line. That's a very important one to be paying attention to, because if we start to close below it, or if we really start to go lower than that trend line, I think that the crypto market's going to roll over. I think the top is in for the next 4 years. But really, what I could see happening is a fake out. Oops, I always do that. Let's see, just get that brush tool. A fake out break, and then everybody just gets so bearish. But then we see, this something like, oops, I'm gonna redraw that because it puts a little arrow at the end. So this just goes like this. I don't think it's gonna go that low, and then it goes back up. Then, we just launch up there. And so, yeah, I mean, anything like that, I think that could just be sweeping, not necessarily sweeping the lows, but shaking out the weak hands or the stop losses, corresponding with 102, 103 or the lows over here, 102. If we sweep them, then I think that would just be taking out any over leveraged longs before, going off to the races. So, yeah, I mean, I couldn't be more excited about Bitcoin, crypto, and, the stock market. I think it's going to be hitting new all-time highs. I mean, the saying is sell in May, go away. Maybe the opposite happens and we see new all-time highs in June. So whether that's in Bitcoin, whether that's in the stock market, so I'm kind of intrigued by that. But, I see that it looks like there are 4 people that have joined, but if we're all caught up on the requests and stuff, I might just throw this up here because, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more overnight preps like this. I will be doing pre-market preps for the majority of this week, going over pre-market prep Tuesday morning, Wednesday morning, Thursday. The market is closed. I also don't have to work, so I'll probably be doing an overnight market prep Thursday evening. And then, Friday, we can just enjoy probably a low volume day. I suspect Wednesday and Friday will be low volume days. But yeah, with that being said, maybe I'll just take this last sip and then I'll sign off. Loud work, yeah. Thanks for your request. And you're welcome. I'm glad that, I know that not everybody who subscribes to the channel, who tunes in, is going to be interested in crypto or Bitcoin, blockchain, whatever, however you want to think about it. I'm really excited about that stuff, so I try to at least do that for myself with those crypto corner stat stackers. But I try to limit that coverage so it's not so dominating. And then also, I feel like a lot of value with the channel comes from, the discussions that we have, sharing of ideas via these live streams. So try to get that in there as well. I'm excited about this week. I think it's going to be, I don't know, I'm just in good spirits. Maybe it's because of that apple juice. But yeah, I'm going to sign off, and I hope that you guys have a great start to the day tomorrow. I'm not going to be doing pre-market prep, but I will be doing pre-market prep on Tuesday and Wednesday. So I'll see you guys then. Have a great start to the week, and hopefully your weekend, is winding down nicely. Take care, you guys.